Good morning, ladies and gentlemen. Welcome to the show on this November the 30th, a Wednesday, 2022. Thank you for tuning in. Glad to have you guys here. Now, I'm going to tell you what, the United States is mulling the possibility of sending, sending Ukraine missiles that are capable of striking targets at 100 miles or more distance. You say, well, why is that important? Well, they would be able to reach targets well inside Russian territory. Because I'm going to tell you, where they're fighting, is not far from the Russian border. It's only maybe, it depends, on what area up and down the front line where they're fighting, that you measure across to where the Russian border is. How much the Russians have advanced into Ukraine, Typically it's about 60 miles or so. But I suppose there's areas where it's less, where the fighting is closer to the Russian border. And so a 100-mile rocket, think about it, even if a 60-mile place, where it's 60 miles that the Russians have advanced in, fired from the Ukrainian side, traveling 100 miles, would be 40 miles deep inside Russia itself. And so if you had an area where they're only 30-mile advance, it could be as much as maybe 70 or 80 miles deep inside Russia. The missile could land. I'm just talking about possibilities. I'm not saying that's exactly what would have to happen. So let's get in there and take a look at the charts today and see what's going on. Another thing I noticed about the war today is that the Russians are digging in. And what I mean digging in is it's trench warfare. They're just starting to, in around Kherson, dig into trenches like they did in World War I, World War II. It's World War style warfare when a country digs in trenches. They get entrenched. And this is a term that's made its way into our popular subculture, the fact of being entrenched. When we want to refer to something that is like, say you got a disease and the doctor says, well, your disease is becoming firmly entrenched. You know exactly what he means, Anyway, let's get in there and let's open up the charts right here and take a look at what's going on. The traders, out there right now. The futures are rising as nervous traders are awaiting Powell's speech. They're waiting to hear what they're going to say. It says, anxious investors are waiting the potentially monkey-hammering speech from Federal Reserve Chair Jerome Powell. I'll tell you, it's getting long in the tooth now. This tightening schedule that we've been under. It's starting to get long in the tooth. We're only expecting a 50 basis point raise next time instead of 75. They've done a whole bunch of 75s. Now they're going to be down to 50s. Soon they'll be down to 25s, and then it'll be over. What we're probably looking at, we're probably looking at another 50. Maybe one more 50 after that, then probably 25s. One or two 25s. Maybe three 25s, and then it's over, And when this thing ends, because this has been a Fed-induced, basically it's more or less a Fed-induced systematic slowdown in the system, it's going to have a forward momentum that's going to lead forward in front of it about 6 months. In order to change that forward momentum of depressing momentum, they're going to have to do a they're going to have to stimulate in order to get rid of that forward momentum. That's going to run out in front of them. And so basically what's going to happen is when this tightening schedule comes to an end, the economy is going to continue to depress. And maybe rather rapidly, maybe a lot more rapidly than we've seen, And then what they're going to have to do is turn that around. They're going to have to go back to stimulus again. So it's going to be wash, rinse, repeat. So it's the front side of this whole thing where we're going to see a big bounce in precious metals. Very similar to what happened in 2008. That's what's happening right now. Go back on your charts and you see how on the front side precious metals take a beating. On the backside of one of these things, there's a big bounce in the precious metals, and they go way up. And in 2008, the precious metals went almost up to $50 an ounce for silver. But that's back when the dollar was worth a lot more than it's worth now. I would say the dollar was at least worth double what it's worth now, back in 2008. From 2008 until now, the purchasing power, what you could purchase with a dollar, was at least double what it is now, maybe more. And so, instead of going to $50, this time silver's going to go to $100. I think it's pretty simple, at least $100 when it bounces this time. And I mean, you know, if you guys are going to miss that boat, then you're going to miss that boat. Anyway, hopefully you guys are on board, you know, with at least a little bit of the stuff. As futures rise, as nervous traders await Powell's speech. So here it comes, the monkey hammer. As they say right here, monkey hammering speech, but just the monkey is right. That's all I'm just gonna say. Anyway, let's move on and talk about other stuff. What is this article here? U.S. mauls 100-mile rocket range for Ukraine with Boeing's help. Yeah, those son of a guns, look at them there on the tarmac right there. They can go 100 miles. Now, that's not the ultimate for missiles. Kim Jong-un's right now is creating missiles that can go 6,000 miles. Halfway around the earth. They can reach anywhere in the United States with multiple re-entry warheads on top of them. You know what kind of warheads? Strategic nuclear weapons. That's what we're talking about. Thermonuclear. I think it was, I can't remember, I think they did a test. Anyway, it's something like 10, 15 times bigger than Hiroshima. You know, each one, and they can load multiple warheads on top of just one of his rockets. Kim Jong-un, he's making like, oh, he's over there, he's got his factories in the high gear. China's now got their factories in the high gear. They're saying, I think within the next 10 years or so, they're going to have, I think right now they have like 300, and they're going to have like 1,500, China. And you can bet Kim Jong-un is doing exactly, in North Korea, is doing exactly the same thing. He's going to have just as many as, in fact, he said that he wants to become the premier, biggest nuclear power on Earth. He's got more nuclear weapons than anybody else on Earth. So, maybe a small country, but what they want is they want to be able to blow up the whole world from that small country with one big red button on a desk someplace, you know. So, I mean, they're working toward that goal, and they're very industrious. But, you know, you think that's bad? That's nothing compared to these factories. I'll call them factories. They're not really factories. They're laboratories. Level 4 hazardous materials laboratories where they can where they can work on these viruses with something called gain of function. And they're digging up, I said yesterday, they are digging up viruses they call zombie viruses from the permafrost and stuff, and from down these ice core samples and stuff, and they're bringing them back to life like Frankenstein does in a laboratory. And they're going to probably start doing research with those, and if one of those gets loose, well, it wouldn't matter. All these missiles and stuff will still be left in their silos when they find our species. You know, nothing but bones left, and they'll come down to our planet, land in some flying saucer in the way distant future, and they'll say, what happened to all these people? Look, they had technology. Look, their missiles are still in the silos. Look here in North Korea, they got tons of the missiles still in the silos, but all the people are all bones. What happened to them? Well, they dug up a virus from the permafrost. Was that a sensible thing to do? Absolutely not. But I mean, there you go. There's no sense among them. They just all want to get the best weapons as fast as they can. They figure, well, this is a new weapon system. We can potentially use this. We dig it up from the permafrost, and we add a few things to it to make it more lethal. I put it into a vial, sit it on a shelf inside a bioweapons facility or inside some laboratory someplace. And gosh only knows where it goes from there. I mean, safe? Absolutely not. And you know, there should be, this is the thing where I'm thinking is, there should be some sort of thing out there where it says, okay, restrictions on them from doing this kind of stuff. Just like we would put restrictions on them if they said, okay, we're going to do head transplants on every person on Earth. Right? We'd say, heck no! No, this is unethical. If they said they were going to start cloning people and left and right and doing head transplants and things like that, or making some new species out of humanity, giving us 2 heads or something, you know, we'd say, hey, hold on a minute, you can't do that. But oh yeah, making some sort of virus that can kill every one of us in 2 weeks. Oh, that's fine. Go ahead on ahead. Just build a damn thing. Well, they don't even ask. They don't even have to ask. Because I don't think the laws are really in there where this is going to stop them from... well, listen. There are laws surrounding the nuclear weapons to a certain degree. There should be. I mean, as far as I'm concerned, they should just make laws in place where they have to disarm these nuclear weapons and decrease the amount of nuclear weapons they have. And they did have laws in place like that, and I'm all for that, you know. But I also want to see us be protected against things that can, other things that can kill us all off. You know, it's just the way it is. And anyway, cryptocurrency today, we're seeing a bounce in crypto today. For the first time in a long time, we're seeing a little bounce. 16,862 for Bitcoin and 1,267 for Ethereum. So small things start in small packages, and it might grow. This might grow. Just like the Chinese riots might grow and they might not. So the crypto market might fall off again. Poof, and gone. And the protests in China might fall off and disappear too. Or this could grow into something big, you know, or the Chinese riots could grow into something. We just don't know at this point in time. But they're still rioting in the street over there. Places like these cities like Shanghai and Beijing and all this. And what is it over? Well, if you don't know, they're rioting because they've been locked up for so long with this zero COVID policy. Chinese are really trying to stop COVID in its tracks. And to the point where they'll go into an apartment building and they'll set up like steel barricades all around it and not let anybody in or out. Well, if you're in there and you don't have an adequate food or water supply in there, you're sealed in, you're in big trouble. What are you going to eat? What are you going to drink at that point, you know? Dow Jones Industrial Average, 193. It's down 193 points on the day at 33,659. If we take a look at crude oil, is at 80.55. It's up $2.35. So it has broken above $80 today on crude oil. One thing I want to say about this market here, the Dow, and the other markets, all of the equities, is over the past couple years, when the market's been peaked for a long time. And this is something they're not figuring in. If the market peaks, say at 36,000, and it goes for a whole year and it doesn't go anywhere, and it comes right back around to 36,000 at the end of the next year, we got 20% inflation out there, or close to it. That means the market, really, even though it hasn't went anywhere, it's lost 20. Which is a rather big drop in the market. So we got 2 years. Well, let's see here. Let's go back 2 years and see. Let's take a look here. See? Look, the last 2 years. You see this? Here, right here. It was a couple years ago, you know. Way back in 21 or whatever, you know. And here we are almost to the end of 22. A couple years later. And basically, it was 34,000 then. It's roughly 34,000 more or less today. Okay, so you see all the way along this top here, it hasn't really went anywhere. mostly. But that's like 2 years. 2 years of inflation. Pretty much 20% per year. That's the real rate of inflation. That means your dollar's probably only got maybe 60-70% of its purchasing power. That means the market's probably lost, I'm just going to guess, I'm going to say it's lost 30% of its purchasing power in the last 2 years, even though it hasn't went anywhere. That indicates a drop in the market of 30%, which is quite a substantial drop, even though the market is still the same. If you get my drift, you know. Let's take a look now at the MOVE index at 131.23. So see, what I'm saying is, right now in this type of a climate, because the dollar's losing value, which you can purchase with it rather quickly, you've got to get a high rate of yield on that dollar in order this to stay the same, or just basically doggy paddle in place. You got to have a high rate of yield on your dollars of probably 20% or more right now, in order just to stay the same, to cover the cost of inflation. And nothing's going to give you that yield right now, so everybody's going to be losing money right now. Money in the bank right now, you're losing about 20% per year on what that dollar will purchase. I know they say it's like 8 point something percent, but that's baloney. That's not the real rate of inflation. Just like they've said that for years. They said inflation was below 2% for years. Well, I used to go out and get a nice meal at a restaurant back maybe 30 years ago. And it used to be $2. I know that's hard to believe, but it's true. You could go to a buffet in town. I used to go to a buffet called Duff's Buffet in Florida. It was $1.99. Right? A really nice meal. Anything you want. Chicken, roast beef, anything. Now, the best you can do here in America is $10 for a decent meal. Actually, probably more like $12 or whatever. So how many multiples of $2 you got? Well, the first multiple, you got $4. $2, $4. That's 100%. Right? And then to go to $8, you're 100% again. You've doubled again. Right? So we've more than doubled twice. That means we went through 100% inflation more than twice. And they were saying it's less than 2%. Well, at 2% inflation, it would take 50 years for it to double once. At 2%. And they said it was less than 2%. That's what the Fed was saying. Oh, our inflation rate is only 1.2 or something like that. We're trying to get a target rate of 2%. Right? So it shows that their estimate of inflation is much lower than what it really is. The real rate of inflation out there was probably already, when they were saying it's under 2%, it was probably already 6 or 7% or something. Right? The real rate of inflation. And so when they say the real rate of inflation is 8%, it's really probably more upwards of higher than 16%, probably higher than 20 even percent. Maybe 22, 23%. See, they have these adjusters and stuff that adjust for inflation that don't take into account things like a box of cereal. So they say, okay, a box of cereal, the price hasn't changed since last year. Right? Yeah, but what they don't take into account, the box is only half as big as it was last year. They chop the size of the product down. And they say, oh, they don't take any of that into account. Shrinkflation. They don't see shrinkflation, which is just rampant out there in every product you buy. Toilet paper, in the end, you won't even be able to take it off the roll. Your fingers will go through it before you even get it off the roll. You know. Your cereal box, in the end, do you remember they used to have those little cereal boxes that you'd buy just for fun? There was like, you'd buy a whole bunch of them, and there'd be different types of cereal all in one big box, and you break them open like sideways and pour the milk into the box. They're little tiny things this big. That's going to be the full-size box of cereal soon, the rate they're going. Because when you used to buy a box of cereal, you used to get a big box of cereal that lasts you all week. Now you get a box that doesn't even fill your bowl. I mean, this is where we're going with all this garbage. Anyway, getting on a rant here a little bit. But what we're looking at here with U.S. Treasuries is rising yields today. 3.7% on the 10-year and 3.8% on the 30-year. And we're seeing basis points like 3% on the 10-year. I mean 3 basis points on the 10-year up. And 1.4 basis points up on the 30-year. So we're rising yields today, all on the long end of the yield curve. And the dollar index is 107.15 and rising right now. It's rising rather rapidly. So there you have it, guys. There's your markets for today. I'm going to tell you guys, with all this inflation out there, keeping your money in the bank, like I say, you're losing roughly 20% per year. Just in your purchasing power. Your dollar's still a dollar. If you keep your dollar in the bank all year long, it's still a dollar at the end of the year. But what can you buy with a dollar? It's 20% less at the end of the year. Now, silver and gold haven't really been doing a whole lot, and cryptocurrency hasn't been doing anything, you know. And a lot of people have just been keeping their dollars as dollars, but people don't know where to go right now. Equities haven't been doing anything. Bonds have been cratering. I mean, you know, and so on, and nothing's doing anything any good right now. It's a very poor environment to try to be an investor in anything. Real estate is going into a slump. The whole thing. There's no place to turn, seemingly. You know, but I'm pointing it out to you guys that I think that because of all of the logistics involved with silver, I think silver is going to do better. It's going to be a better performer, I think, than a lot of other asset classes. And it's coming up soon. It's going to do the same thing I think it did back in 2008 when we got that pop up to $50. But what you don't want to do is, you don't want to, if you do see a pop like that, you know, ride it all the way up to the top and then ride it all the way back down again, which is what a lot of people do. Anyway, thank you guys for listening. We'll catch you guys in the next show. Have a great day. Bye-bye.